This is our Forex blog for November 16th, 2011. And like most days, we really want to buy the strongest currencies versus the weakest, and we want to sell the weakest versus the strong. In an ideal world like yesterday, we have, the dollar and yen very strong, and late last night they were also strong. But one of the things that's happens quite frequently in currencies is, once they move a significant distance, there's no more buyers or no more sellers, and it needs to have a deeper pullback before traders are willing to buy the discount. Think of the trading as an auction market. If Corvettes cost $50,000 or $180,000 at a dealership, you're not going to pay $120,000 for them. And that's the same thing with the currency markets. So the dollar and the yen were strong, and the Swiss was extremely weak. It's always wise to look at these on a daily chart. Let's put the dollar Swiss up. Period D brings up the daily chart. And you can see that over the last 2 weeks, this currency has gone up close to 650 pips maybe. And so, after that kind of a move, it's more likely to have some kind of a pullback. Notice this big move here, 4 days down. Now, this was clearly a trend here, but if you tried to buy it that day, or that day, you lost money. And so it's always wise to look at a currency's daily chart to get a feel for it, or something a little bit smaller than that, 240 minute, also is decent for looking at trends. You can see that since Sunday, this thing's been going up. Since Sunday, it went up from the low here, 89.64, 240 pips in the last 2.5 days. So, it's entirely possible if this trend's going to continue, it might pull back 38 to 50%, even 62%. So it could legitimately fall another 70 pips, find support before going higher. So always be aware of that when you're trading using our currency meter. If the long-term trend is up, the daily, weekly, monthly trend is up, as you can see both the dollar and yen were, that's fine. But once you start seeing some signs of that trend changing, like extreme weakness, the most weakness in about 12 hours, followed by the counter trend move, or the second move having half the strength that the previous weakness has, even though the daily, weekly, monthly trend is up, it's entirely possible that you're going to get a decent pullback. And even though the daily, weekly, monthly trend is up, you can trade this on the short side. But you want to do so against whatever currency strongest, coming up to 3. The New Zealand in real time was quite strong, coming up to 3. So at 3, you might want to, you never know how much weakness is going to come in or how long it's going to last. Anytime the daily, weekly, monthly trend is up and is up this much, typically you're not going to get more than 1 to 3 hours of a counter trend move. But that's enough to make 20 to 40 pips, sometimes 50 pips. So coming up to 3, let's look at the dollar or New Zealand dollar. Strong New Zealand, weak dollar. Here's 3 o'clock. This one had just gone back up to the previous day's high, a little bit of a pullback. Previous day's low. This is a resistance area. So when a resistance area gets penetrated, it comes back down and doesn't come back down near the lows and doesn't even retrace 38%. That's a big sign that the trend's going to continue. Okay, I was a little bit wrong. It did retrace 38%, didn't hit the 50% level. Once it goes back above the previous day's low right here, it's a pretty decent high probability trade. And you can also use our range bars to increase your odds as well. Let me try to bring one of these up here real quick. Let's bring up 5R for 5 pips per bar. And I've been leaving the software running since, I think, Sunday afternoon. So it's possible, when you do that, sometimes eSignal has a problem. Okay, here we go. Came up. We're going to look at this coming up to 3. And again, because the New Zealand is weak and the dollar is strong, we're not going to, expect more than 10 to 30 pips. So here is 3 o'clock. You get this little pullback. Notice on the range charts how clear it is. And this is a good, Mr. Talat, you asked me yesterday, show me, a harder day. Obviously today was one of those. But you can see on a range chart, when you have clear momentum with our tools and then a decent pullback, you can go long once it breaks above this bar's high with your stop 1 or 2 pips below the low, and you're risking less than 10 pips. And if this trend does continue, it's probably 60% likely to go to the fib target, which is up here. And notice, double topped at the 1.618 before slightly going higher and pulling back. Um, this is your profit target. You go along right here at 60. You have about a 40 pip profit while risking really about 8-9 pips. And more than likely, I wouldn't have held on up there. I would have got out of half as it went sideways here and went underneath these bars low. And when it kind of went up a little bit higher and it was just a few pips away from here, I probably would have got out of the second half myself here. I wouldn't have held for that because the longer term trend was down clearly. But our tools, if a currency, let's bring up the New Zealand dollar on the daily chart first as well. So notice this currency, was in this strong downtrend. The last wave up, it went up a little bit past the 62% level, which is a sign of bullishness. And it came down and couldn't find support, couldn't go higher. But more than likely it hit the fib target of this little wave right here. 7640 was the fib target. So because of that, and 7640 is a very high probability area to reverse, it came down last night and it was quite weak. It went 10 or 12 pips underneath that level. Once it came back above that level, this is actually a pretty decent place to buy even an hour earlier because of the fib target. So let's look at that particular chart. I'm going to do a little bit more training in our Forex blogs just because it's part of our class as well. So here's 2 o'clock. You see this, it went up with quite a lot of strength. The pullback right here. This is a very high probability place to get in. It's a 1, 2, 3 low pattern. Also watch our videos online. And, more than likely I would have got out of that trade right there. So that would have been from 45 to about 65. This is a 20 pip move. Then you get your nice little beautiful 15 pip pullback right here. And the second trade, generated a little bit over 30 pips. But the currency meter can be traded when you see strong patterns like this. Extreme weakness followed by a little bit of strength. Again, that weakness is likely to continue. Just like a lot of strength followed by very little weakness, in the direction of the longer term trend is always better. I'm never going to tell you that's not the case, but you can still make money like you saw today in the New Zealand dollar when those two patterns on two currencies lined up. Now, here's some strength in the euro followed by very little weakness. That strength's likely to continue. It did, but as you can see in real time, it didn't have that much strength. And then you have some weakness right here. Because the longer term trend's down, if you were in a euro something trade there and then the weakness came in, when it matches a longer term trend, you got to take your small loss or break even, get the hell out, and trade, in the direction of the longer term trend. And in the dollar's case, that weakness came back and it stayed weak, for many hours. The New Zealand stayed moderately strong with almost no weakness for, a little bit over an hour. But when that doesn't happen, and let's be realists here, not every trade's going to work, but when you have small losses of 6 to 10 pips, and if your initial stop is 12 pips and the market goes up 5, guess what? Your stop goes up 5 too, and you're losing 5 to 7 pips instead of 12. And sometimes your 20 pip profit target, the market shoots right through it and moves 40 or 50 pips. So you're going to get an occasional bigger win than you anticipate. Your losses are going to be whatever you budgeted for, planned for, or less, and sometimes break even. And sometimes trades that just kind of go up 5 or 6 pips and go sideways, you exit half, you move your stop to break even, and you made 2 to 2.5 pips on a trade that didn't work. Now, when the New Zealand goes weak again right here, and then it has a little bit of strength, because the longer term trend is down, we're much more apt, and we really want to trade this on the short side. We're looking for sells after 7. Now, the dollar had some strength right here. After 7, it already, goes weak. There may not be. Here's one in the pound. A lot of strength followed by little weakness. The pound is the best one to be buying against the New Zealand after 7. So we'll bring up, I don't have the pound. New Zealand is one of the charts I leave running. And we'll put a 5-minute chart on here. But after 7, we're looking to buy this. Now, in this instance, actually even before that, if you, let's put on our FX Trend Pro tool, it would have given you a buy entry right here a little bit earlier. But I was just looking at the currency meter. FX Trend Pro is a wonderful tool for showing strength. And you can see as this thing was coming down, the weakness kind of disappeared. Pound New Zealand is in a daily uptrend. And then you got this nice little move here, a little bit of a pullback. This is clearly a much better, the first time the market makes a big move, the first pullback is always the best trade. It's the highest winning percentage. You have your Fibonacci profit target. Look where it went, to the pip. And so this trade up here is, far less advantageous because your profit target's closer. But nonetheless, if you got in here, this is about a 1.5 times likely profit target. Here it is, 62.55. You would be buying this around 97. Oh, actually, yeah, so you're risking about 10 pips to make 20. It's a 2-to-1 potential risk to reward. And remember, sometimes markets go through resistance areas. Usually they stall the first time they hit it. And you probably would have got out of half your trade here when it started coming down and get out of the other half. You would have only probably made 12 to 14 pips on there. But the first trade, when it had incredible momentum, and it had more momentum than weakness over the last few hours, very likely to continue up. I'm going to do our regular class now.